Welcoming you, sir. I now call upon Ramya from BCom Horns first year to say a few words about Mr. Sandeep Pandey. Good morning to all. It's my pleasure to introduce our guest speaker of Session 1, Mr. Sandeep Pandey. Mr. Sandeep Pandey is currently pursuing PhD from Savitribai University, Pune. He done his Master's in Business Administration and MA History. He also done his Postgraduate Executive Program, IIM, at Ahmedabad. He done his fellowship in Insurance Institute of India. He has 23 years of working experience in the life insurance industry, having worked in administration as well as marketing links. He joined the Insurance Academy at Pune in October 2016 on deputation from Life Insurance Corporation of India. He has done his certification courses in the field RMS as a NPTEL certification research publication from Savitribai University, Pune. 5-day online workshop on universal human values in education organized by AICTE. He worked as a team member for many research and consultancy projects related to the field of insurance. His articles and commentaries were published in journals and magazines. We are privileged in having you with us, sir. I thank you for accepting our invitation and being with us today as a guest speaker. Thank you.
Thank you so much.
Thank you, Ramya. Now I invite Mr. Sandeep Pandey, sir, to address the gathering.
Thank you so much, ma'am. Thank you, Shri S.S. Jain College for Women, Chennai, for giving me an opportunity to interact with the students on the other side. At the onset, I would like to thank the dignitaries, the management of the college for inviting me, sending me an invite to interact with the intellectual masses on the other side, the bright students who will be the future of coming India, who will be building the nation in the time to come. So it always be a pleasure to interact with the young brain, young masses, get to know about them, and also getting the vibes from the other side also. That is also very important, coming out with new innovative ideas from the other side. So as during the introduction, Ramya said that I have done my master's in history. So I love talking on length to the students and telling in a sort of a story. So for this 1.5 session we are having, that too on the sub-theme of purpose of insurance, why the insurance is required, what is insurance. So this is what I'm going to take forward. And after that, Dr. Doss will be talking about the intervention of digital intervention of insurance, of technology in the insurance sector. So first 1.5 hours will be focused on the purpose of insurance. So I would like to request all the students on the other side. So we'll make it more of an interactive session. So even though it's an online platform, it's very difficult to get interacted. For the benefit of both of us, it should not be a monotonous talk. So it will make it an interactive one. So I request all of you, please keep on chatting with me. Go to the chat box wherever you feel like talking to me, raising some queries. You can always go to the chat box. We can park your question there. Later on, we can take it if we are not able to take at that point of junction. So we are going to start the session. So the agenda for the session will be, first we will be talking about insurance. So before I start, may I have some feel of the gathering, whether the subject of insurance has already been exposed to you? Any one of you is aware of what is insurance? So you can go to the chat box if you are aware of insurance or the subject has been exposed to you earlier. So I can see some of the comments are there that yes, we are exposed to the insurance. So the agenda for the meeting will be what is the insurance, then we'll move into why the insurance is required, then the different types of insurance forms we are having, and then we'll talk about the industry's business figures, the business performance, how the industry is doing, why we call it a sunrise industry. So what are the traits of the industry? Then we'll move to the industry's growth drivers and what are the opportunities which are there. Being a student, being the budding insurance professionals, what are the opportunities we can get in the industry? And then at the end of the talk, briefly, I will touch about my academy, that is what is National Insurance Academy. So before we go, why insurance? Let's start with some stories. I will share a story with you. So what is the best decorative PVR or a cinema hall at Chennai? So suppose it's a PVR there. So I landed at Chennai last week on a weekend, and I asked my wife, we'll go to see a movie at Chennai. Rajnikant movie has been going on in one of the best cinema halls at Chennai. So I asked my wife to accompany me. We take out our car and went to see a movie there. But instead of getting my car parked in a parking there, I parked my car somewhere near the ground. Because the parking charges, the lot was, he was charging 50 rupees. I said, okay, I will not park my car in a parking place. I will park my car. There is a vacant area over there. There is a big ground over there. So I parked my car in the ground. The movie got started at 3 p.m. sharp. The scene coming on, flying. But even though I was watching the cinema very rigorously, continuously, but my mind was somewhere else. I can visualize my car parked in a ground. Somebody maybe putting some playing with that car, or I was thinking that my car got stolen. But during the tenure of 3 hours, whichever I was there in that beautiful PVR, along with my wife, having popcorns, the cold drinks and whatnot, but my mind was totally into my car. Had I given 50 rupees for the parking, that I could have been totally glued to that beautiful movie of Rajnikant sir. But as I've not paid that parking fees, saving that 50 rupees cost my 3 hours of my patience. So I was totally somewhere else. My wife was enjoying the movie, but my mind was somewhere else. So that small amount of 50 rupees, that is a parking fees, that is what we call that money is, if we take into, is equivalent to the insurance. That is the insurance premium, we can say. By paying that small amount of premium, my assets can be taken care of, the financial losses can be taken care of. So I can equate that the parking fees of 50 rupees with a small amount of premium we pay to the insurance companies to take care of my various risks I have. So moving forward, I will be sharing some pictures with you. So we'll be trying to find out whether, as an insurance, do the pictures play any part in insurance, or are these events or these events can be insured, or they are being insured? Let's have a look of that. So what we can see in the picture right now is we had a torrential rains in the month of December 2015 in Chennai. We lost some 500 lives during that time, and the total damage, the economic damage, the financial loss was amounting $3 billion US. That was a huge loss, financial loss. The impact was because of climate change, and also you can say it's because of urbanization also. Our water bodies have been dried up. A lot of new commercials, new residents have come up on that water bodies. and there is no proper drainage system in our big cities. Right now, the same situation we are facing at Bengaluru also. Right now, in the north also, the Gurgaon or the NCR, the Gurugram, we called it now, facing the same sort of a problem. Heavy rain, the water get indentation, and we are losing the properties. The assets are being face a lot of dangers. So whether I'd like to know from the audience whether this event can be insured. Can insurance industry play any role to mitigate the risk, the financial risk? Can we do that? Do insurance industry play any role, or they can play any role in it? You can go to the chat box. Can our insurance industry play any role in that? So loss was big. There was a loss of $3 billion US. But I'm afraid to share, out of this $3 billion US financial risk, only 8% of, approximately 8% of those risks were insured. So the total loss, you can assume what was a huge loss. The people, the industrialists, the common man has suffered because of the Chennai floods. I'm moving to another scenario, what we are facing right now, these days. We keep on facing the cyclones. Earlier, the cyclones were hitting the eastern coast, the Orissa, coming from Bay of Bengal, hitting West Bengal. But nowadays, not only the eastern coast are facing the cyclones, but our western coast have also facing the cyclones. Recently, we had a Nisagra cyclone that was hit during the COVID time at the western part of Western Ghats of India. Not only this, the frequency of these cyclones, the natural calamities had gone up. Not only that, the frequency has gone up, but the impact the industry, the economy is facing because of these frequent cyclones, the natural calamities, it's on a very higher side. When we assume that only 8% of my economic losses are being covered by the insurance companies, you can find out, you can see that what are the huge losses the common people in the industries are encountering due to non-coverage of these risks. So there is a need to insure those risks. And for that, you and me have to create an awareness among the masses that these are the risks which can be taken care by the insurance companies. We have an insurance industry in India which can cover these economic losses. And that is the role being played by insurance companies, and that is why the insurance sector is there. You can see the huge losses because of these natural calamities, the climate change, the whatever we are experiencing. It was 2020, the global losses was $210 billion US. What a huge figure. And out of that 210 billion losses, only the insured losses was 82 billion. That is only 39% losses were insured globally. When we come into the scenario of India, only 8% of those economic losses are covered in India. So we are very much trailing if we compare it, even though the global risks are only 39% cover. But when we talk about the Indian scenario, our risk, the economic losses we are encountering because of these climate changes is only 8%. So for the last 10 years, I've taken a figures from Munich Re. They say that in protection gap in India is 92%. So for the last decade, the total losses because of the climate changes was somewhere around 67.6 billion US. But out of that, in India, we have insured only 5.7 billion US of that economic risk was covered by the insurance companies. So what are the huge losses the common people, the industries, the economy is facing because they are not insured? So insurance is one of the things which can take care of that. So as an industry, as a common person, what the insurance companies plays a role? They are the risk mitigators. As an individual, as a company, as a corporate group, I can pass on my liability, my risk to the insurance companies, and they will take care of that risk. Some of the events recently we encountered in the global scenario, I'll be covering, will taking to that also. So impact of Russian-Ukraine war. Yes, we are facing the food and energy crisis, redrawing of supply chains. We are, because the Black Sea, the shipments are not passing through the Black Seas, though they have to be rerouted. The trade routes have been rerouted, and also the cost of the cost of energy, the fuel has gone up like anything. Because we can make out from the Ukraine, they are the major supplies of sunflower oil. So 90% of the exports the Ukraine does for sunflower oils. This belt, the Ukraine, the Russia, they are the bread growers of world. 30 to 35% of the wheat, the wheat we get from these areas. Once they are forced into this war, we are deprived of those things. Also, they are also the major fertilizers providers to the world over. And now with the crisis, the war is there, the prices of fertilizers have gone like anything. So on two accounts, one is the end result, that is the crops we are not getting, the food we are not getting, and also the input, that is the fertilizers we are getting it, we are not getting it, the cost of the fertilizers have gone up. And I was reading one of the articles that says that in USA, right now, the people, the farmers have moved away from growing the weeds, the crops which require more fertilizers, and they have gone back to soybeans. So they are sowing soybeans because that require less fertilizers, because the cost of fertilizers have gone up. So you can assume they were not able to grow the crops since winter, this time also December. So you can assume the next year, you can foresee in the time to come, what will be the scenario? The food scarcity will be there. The crop prices will go up. Thanks to the Indian government, our import, the oil import prior to the war from Russia was, I think it's only roughly around 1%. Now slowly it has gone up. I can from one of the figures I got that says last month it was roughly around 20% of our exports are coming from Russia, that too on a subsidized rates. So although we are getting the oil at a cheaper rate, but if you take into account the other cost of other things, the economy is facing a crisis because of the global economy is facing crisis because of that. So can you assume what role our insurance industry can play in this scenario? During the war, insurance industry, global insurance industry, are they playing any role in this crisis? Are they helping the people out there during the crisis? Just as a food for thought, do insurance industry is playing any role during the wartime? So I will give you two examples how insurance industry is playing a role in that. One is the shipments who are coming, who are passing, the cargoes which is coming from these Russia or that areas, they are being provided insurance coverage. So my cargo is being insured by the insurance companies. And recently, the Indian insurance companies, they come out, they formed a pool. So to care of these expenses, the losses which might cover up, because the risk is on a very higher side. The second part is that we have a crop insurance policies, where if our crop get damaged, the insurance companies can come forward and make that loss good. It can be due to the floods, it can be due to the hailstorm, it can be due to the storms, it can be due to any weather change. But we have an insurance policy, that is the crop insurance policy, that take care of my damages due to that. So two ways the insurance companies, if in a broader perspective, they are taking care of these the situation we are facing because of this Russian-Ukraine war. I am moving to another scenario. Have you heard about this? There was a blockage in the Suez Canal 2 years back. I think it was 23rd of March 2021. 12% of global trade, around 1 million barrels of oil and roughly around 8% of LNG passes through that Suez Canal each day. And the authorities at that Suez Canal, their revenues, they were hit by the revenue loss of 14 to 15 million US dollars per day because of that blockage. So that blockage was there from, I think it's 23rd of March 2021 till it was cleared up, I think it's 28th of March 2021. So the blockage was there for 6 to 7 days. And approximately the losses were tuned to 6 to 10 billion US dollars because of this blockade. The cargoes, the containers were not available during that period. The cost of containers have gone up. The ships have to take they have to be rerouted during that period. They have to pass through Cape of Good Hope, that you can see below the African region, instead of going through the Suez Canal. The cost has gone up. It has hit the demand supply chain. Thankfully, that the ever given the ship was having the fuel, it didn't hamper the power supply in the container. Otherwise, the perishable goods which are there in the containers could have been spoiled. The cargo which was there, the perishable cargo, may have got damaged. So who will be taking care of that? Those losses are being insured. The insurance companies are taking care of that. So you can figure out 10 billion US dollar losses, but the insurance companies, the reinsurers are there to take care of that losses. So insurance company is giving a helping hand to the industry, the global industry, to come forward, work forward, or take a risk, because the insurance companies are there to back them up. They are there to own the risk on the behalf of the industries. Recently, 2 years back, we all had that COVID-19 pandemic. Started from China. In India, it first hit, I think, Kerala, to then we even at Pune, we had a lot of COVID cases during that time. The figures I've taken from yesterday's website, India Fights Corona, that says that India had a 4.45 crores people who were infected by COVID. And we in India had a death of 5.28 lakh people died because of COVID. These are the figures taken at 26 September, yesterday, only at 8 Indian International Standard Time. So roughly 4.45 crores people were infected because of COVID. A lot of people have lost their jobs, migration of labors from one side to another part. The industries were shut down. Huge losses, huge economic losses. And thanks, we are the first one who come out of the blocks. And today, when India becomes the 5th largest economy one more time, we are one of the fastest growing economy, because we are the first mover. We grab this opportunity in the crisis that yes, we will again come up. And we are we are on a right path, the fastest growing economy. And one of the articles I was reading last week that says by 2026, we will be 5 trillion US dollars economy. Insurance companies played a vital role during that COVID crisis. How do the premium are being decided by insurance companies? Any idea how the insurance premium are being calculated? How we design a insurance premium? So if I'm taking a policy at the age of say 45, 50, what should my premium, which are the factors which are going to decide that premium? So insurance companies, we work on a historical data. So we assume that, say roughly say 10,000 people of this age group living in this area, this geographic area, died during a certain period of time, say 1 year. So on that historical data, we decide a premium. But during the COVID time, the industry, the insurance industry, for the benefit of the for the people, the policy holders, they come out with a plan exclusively for the COVID patients. The COVID Rakshak, 2 plans for there. The COVID, one is indemnity plan, what was defined benefit plan. Even though we don't have the historical data, because it's a new thing, the COVID-19. We don't have the historical data, even though the insurance companies take the risk and come out with a plan for the benefit of the policy holders. They come out with the COVID plans exclusively for the COVID patients. So industry is always there to help the common people. And that is the beauty of the industry. That is why the people who are working in the industry, the insurance industry, they are doing their social service. They are helping the society. Post-COVID-19, even we can take today's our national seminar also. We are interacting. How we are interacting? Take a scenario 2 years back, before, say, assume we are in 2019. So if we have to host a seminar, either the students from Chennai, they have to be at Pune to be the part of the seminar, or I have to go to Chennai to be a part of the seminar. But post-COVID-19, the things have changed drastically. There was a saying from Vladimir Lenin that says there are decades where nothing changes, but there are weeks when decades has changed. And post-COVID-19, the scenarios changed like anything. And thanks to this digital technology, we are interacting one-to-one with the audience through a Zoom platform. So when there is a technology that is helping the people interact with each other on a digital platform, there are many hazards, many risks which are associated with that. So I can see some 196 participants have joined this seminar today. So what is the risk associated with this interaction? Maybe the data of all the 196 participants have been breached by one of the intruders. He has taken away my mobile number, my mail ID, where I stay, where I work, and all the data of 196 people got breached. Last week only, there is a new term we are listing these days, that is moonlighting. So these are the hazards which are associated with this excessive digital intervention, the technology. So that is why there are cyber attacks. So the data can be compromised because of a human error. It can be hacking. It can be a privilege misuse. If you give somebody a privilege that, yes, you have access to this data, that person can misuse that privilege of the data. And the actors who have the motive behind that is 90% of that is because of the financial one. Other can be like the war is going on between the Russia and Ukraine. Maybe the hackers, good hackers from one of the country, they want to hack into the system, the system of, say, it can be a power system, it can be their ministerial system where they can get the information, or they can hack it down to block it. But 90% of this compromising of data is because of the financial one. And maximum data is the personal data which are being compromised. Then 70% of that. And again, we cannot stop interacting in this time. Even today, when the COVID-19 impact has been subsided, still, a lot of the companies are still continuing with this online work from home culture. A lot of the IT firms, they are still insisting with that. Some of the companies, they have gone to the hybrid mode. They are asking their employees twice a day, twice a week, thrice a week, come to the office. Otherwise, for the rest of the days, they can be online. They can join it anywhere from anywhere they want it. So in this change scenario, if even today the IT companies are not gone offline, off-site, they're still insisting with work from home culture. My insurance companies, my insurance sector is coming out with a cyber risk policies, cyber insurance policies to take care of these breaches, the liabilities which comes because of the cyber attacks, the financial losses which may occur because of these cyber attacks. So insurance companies are always there to take care of the financial losses. So what is the insurance? So insurance is a system by which losses suffered by few spread over to many exposed to a similar risk. I will give you a story. Now we have moved to a nuclear family. Family may be having 4, maximum 5 people are there in a house, in a home these days. But I will take you back to 50 years, 60 years back, where we used to have a joint families. There is a father, there is a grandfather in the family, grandmother will be there in the families. 4 brothers will be there in the family, and their wife, their children will be there. So it's a huge family. The new joint family used to reside in a big houses. So father is there and he has 4 sons, then their family. In a scenario, we'll take a scenario when one of the family members, so one of the son dies because of maybe because of any illness or any reason, met with an accident. The father and the rest of the family members, the other 3 brothers, they own the responsibility that, yes, we own the responsibility, the financial responsibility of my deceased brother. So they have shared the responsibility. Now in this change scenario, in this nuclear family, the insurance companies are playing the same role. Through pooling of the risk, making a pool of the similar risk for people who are exposed to the similar risk, the peril can be a death, a peril can be a fire, peril can be a cyber data breaching, peril can be a flooding, peril can be indentation, peril can be breakage in a ship or an aeroplane. So peril, it's a new term I shared with you. Peril, what is a peril? Peril is an event which causes the economic loss. So the people who are exposed to a similar peril, similar risk, they come into a pool, they form the pool through insurance. That pool take care of the losses suffered by few among that pool. So insurance is a protection against financial loss arising on the happening of an unexpected event. So we don't know what is going to happen next. Right now, I'm talking to you. I don't know what will happen to me next moment. And even I'm not aware that what will happen to my system. So even this event, so one way I may be insured, I can have my own life insurance policy for my mom, or I can have my health insurance policy for myself. But for insuring this national seminar, I can go to one of the insurance companies, the non-life insurance companies, to cover this national seminar, which National Insurance Academy and Shri S.S. Jain College of Women, Chennai, are organizing jointly. So a particular event, a short-term event, can be insured, and a person who will survive 70 years, 80 years, 85 years, even that human life can also be insured. So insurance, whatever there you can, which is under the sun, it can be given a coverage against the financial losses. So each and everything is covered under for the financial losses through an insurance coverage. So that is the beauty of insurance. Welcome to this beautiful world of insurance one more time. So why do we need an insurance? So I shared an example with you about that joint family. Now that joint family has become a nuclear family. We have a one breadwinner. There can be a double income group. Husband and wife may be working. So insurance products, what they are doing, why do we need insurance? Insurance products are providing a financial cushion. They are providing a financial protection against the adverse financial burdens suffered due to unforeseen events. So if today something happens to me, I have a family of 4, my wife, my daughter and son is there in the family. I am the only breadwinner of my family. If something happens to me right now, so there will be a financial burden on my family. Who will take care of that? We have an answer. Our insurance company will take care of that, because I can pass on my risk to the insurance companies by paying a small token money. We can call it a premium for getting me insured against a specific sum assured. You are joining this seminar through a mobile phone. So your mobile phone can get damaged. Somebody can steal your mobile phone. Even that mobile phone through which, or a laptop through which you have joined this seminar, this conference, even that can be insured. You pay a small amount towards insurance for ensuring that. Through a cyber policy, you can ensure that the data which is there in your mobile phone doesn't get, if that get compromised, if there is a liability being created, the insurance company is always there to take care of that financial losses you may encounter because of that data breach. So insurance is the answer for everything which is under the roof or under the sun. So what is the insurance? Insurance is a risk management tool, risk mitigation tool to take care of the financial losses which can happen anytime in future. We cannot predict it when it is going to happen. But yes, it can happen. It may not get happen. So what insurance is covering? they're covering a pure risk. They're covering a pure risk. That is, there can be a loss or there may not be any losses. So we as insurance companies, what they are doing, what they are covering the pure losses. Pure loss means there can be a loss or there cannot be any losses. So what all we can cover under in insurance, almost everything that has a financial value in our life and has a probability of getting lost, stolen, or damaged due to any unforeseen events can be covered through insurance. Property, both movable or immovable, vehicle, cash, household goods, health, dishonesty. Also, your liability towards others can also be covered. So, when we talk about the forms of insurance, we are moving into the one form of insurance, one type of insurance, that is a life insurance. So life insurance is a bridge which covers the economic gap between the time a person dies and the time he should die. So I shared my own example that I have a family with me and I'm the only breadwinner of the family. If I goes out of the system, something happens to me, the insurance company will be there to bridge that economic gap, the economic crisis, the financial crisis, financial burden my family is going to encounter because of non-existence of me. So that is the role of a life insurance. So the life insurance, what it does, it provides the family protection. It protects the assets of the person. It's against the mortgage redemption. It's my policy. I can surrender my policy. I can take a loan against my policy. I can pledge my insurance policies in the bank and take a loan against that. So my policy has a liquidity. Aid to thrift by small, because life insurance products are for a longer period of time. There are very long tail contracts, 10 years, 15 years, 20 years, 25 years. So every years I keep on paying the premium. So it's making a habit of saving through a small premium. So it's making a habit for inculcating a habit of a small savings into me. Some of my policies, I can take a policies under a Married Women Endowment Act, 1874. So as a person, I have taken a policy under that. So I am protecting my rights, my family rights, my wife, my son, my daughter's rights, if I've taken a policy under that. So no creditor in the world can take away that assets from going to my wife and my son and daughter. As you all are aware, they have the tax benefit also. The premium we pay, we get tax benefit under ATC, and the maturity proceeds, the death proceeds we get in the policies, they are exempted under Section 1010D. Some of the policies are exclusively made for the education of, you take care of the education of your child, because the policies are catered like they are sold on a need-based analysis. So if I have taken a policy, I've taken a policy for my son and my daughter, assuming that at the age of, so today my daughter is 15 years old. So maybe 3 years down the line, she may require funds for getting education because the cost of education has gone up. So I know 3 years down the line, my daughter, when she takes admission into any of the colleges, she may require a good amount of fund. So I've taken a policy some 15 years back for her to take care of the future contingencies, my liabilities which are going to come. So to take care of that, we have the policies. And for the life stage needs, we have different sort of policies, the life insurance policies. For a child, we have a policies. For annuity, the people who want to lead a good, healthy and a cheerful life and graceful life after retirement, we have the life insurance industry. They have the annuity plan, they have the pension plan from them. The young people, they have the capacity to own the risk. They have the capacity to take more risk. So the life insurance companies, they have the ULIP products from them, unit linked products for them where they can invest their money as per their choice. They can decide on their own that where my assets will be kept, whether it's equity, it's a bond, or it's a debt, or it's a balance fund. As a policyholder, I can decide through that ULIP policies. So there are policies, the life insurance policies for different needs. So when the life insurance policies take care of the risk of dying early, if I survive more, who will take care of that? So for that, we have a pension policies, the annuity plans. The pension products mitigate the consequence of living too long, assuring dignified retired life independent of the charity of others. We should not look for others, even my son and daughter, during my retirement time to give me money, to give me financial protection, because I have taken a policy way back while I was earning an annuity policy or a pension policies that has given me a support system, a financial support after my retirement. So we have a plan. The life insurance policies take care of the financial burden, financial risk because of premature death. We have an annuity plan that take care of the person's financial liabilities if he live more. You can see some of the pictures I have shared here. We have a motor insurance picture here, fire insurance is there, cyber insurance is there, the marine insurance is there, the health insurance is there, and the aviation insurance is there. So what is being not covered, what is not human, everything except that comes into the forte of general insurance, that is non-life insurance. It covers non-human objects like animals, the agriculture crops, goods, factories, cars, liabilities. It covers losses due to fraud, the burglary, the negligence by professionals. So you name it, what not they covered. So the floods at Chennai, they are covered by non-life insurance companies, the general insurance companies. The cyber crime which is coming up, the compromising of the data, the financial losses because of that, the liabilities created because of that is being covered by general insurance companies. The marine cargo, marine hull being covered by general insurance companies. The health insurance, post-COVID, a lot of the people, a lot of awareness has been created for going for a health insurance policies and the term insurance policies. So general insurance companies are there to provide health insurance coverage. And even in today's scenarios, a lot of the standalone health insurance companies, there are 5 standalone health insurance companies are there. Those exclusively gives the health insurance products to their customers. So aviation is also there. Aviation insurance is there. So they take care of the third-party liabilities and the hull. So whatever which is not human is being provided a risk coverage through a general insurance, that is a non-life insurance products. As I had already shared with you, that life insurance contracts are for a longer period of time. Our regulator says the minimum period is for 5 years. But a general insurance products, generally they are for the contract is for a 1 year of term, and every year that the contract get reduced. Even a particular event can be insured. So if we can insure today's national seminar, we had a England T20 and a one-day series. That series was insured. From 28th September, there is another series cricket match coming up between India and South Africa. That will also be insured. The World Cup T20 World Cup for cricket is coming up. World Cup for football is coming up. That again, that will be insured. Thankfully, this time the BCS has already declared that this time again all the IPL franchisees will be having their cricket matches at their home venues. So thankfully, the CSK will be able to play their matches at Chennai this year. I'm a big fan of CSK. So those IPL events will be also insured. So insurance company is providing a risk mitigation tool through which the organizers can organize that events without bothering about the financial losses they may encounter because that matches got curtailed or matches got abandoned because of excessive rain or maybe because of any unforeseen reason. Because last time the IPL was cancelled and taken to Gulf because of the COVID reasons. So there can be N reasons because of that. But that particular event got cancelled. If that peril has been covered by insurance company, they will be liable to make the loss good. They will indemnify the loss good, the financial loss which the policyholder or the organizers of that particular event has encountered. So the insurance companies are making that event happen. So no, if say when we talk about Make in India startups, a lot of the young people are taking the risk, coming out with new ventures, new ideas, implementing those ideas, coming out with factories, manufacturing and all that, whatnot. So insurance companies is always there somewhere at the back who is providing them, yes, you can go ahead and open a factory. You can come up because we are there to take that financial losses you may encounter because of any unforeseen reason. So insurance industry is playing a very vital role in taking this Indian economy forward. But as I had already shared, 92% of there is a protection gap of 92%. So you and me, we have to reach out to the people to make them aware that do insure your financial losses, because insurance companies are there to provide you a coverage for that. So it's in the air post-COVID. What everyone is talking about health insurance. Yes, we do want to have an insurance because the cost of my medical expenditure has gone up. COVID is there in the air for the last 2 years. Even when we take our interviews, the PIs for our students, this time we had it off-site, but last year it was online only. So a lot of my students, they do know about health insurance because they have seen that in their family. A lot of the people have got admitted to the hospitals because of the COVID. And most of the people who have joined this time in my campus, maximum of the people, my students, they already had bought their health insurance policy, either individual policies or they are the part of the family floater along with their parents. So that COVID has played a vital role in pushing the health insurance product in the market. Even though right now, because of that, the COVID, a lot of the insurance companies are being badly hit on the bottom line because of the claims which has come out with the health insurance policies because of this COVID. But they are there to make the losses good. They are not running away from making the payments. They are making the losses good. They are making the payments, they payouts, that too at the right time. Because the cost has gone up, the hospitals are charging more. As insurance companies don't have the control over the hospitals, they cannot control the hospitals. So the cost has gone up. The insurance companies are being hit hard because of the rise of the medical expenses, but they have not shied away from making the losses good. I will share the big business figure of the health insurance sector with you. The growth is tremendous. Not only health insurance, in life insurance, the general non-life insurance, the general insurance, the industry is growing like anything. So this is the landscape in India right now. The majority of the population not covered on health insurance. And even today, out of my pocket expenses, accounting for 70% of my total health expenditure. And 25% of the people, Indians, our fellow Indians who got hospitalized, fall below the poverty line because of these medical expenditures. So there is a need. We all know health insurance take care of my exorbitant health insurance expenditure, the expenses, but still the people are not going for that. But now with the younger population, the millennials, they look for a quality of life and they have a lot of disposable income with you. They are going for that. They are going for a term insurance policies. They are going for ULIP policies. They are going for riders. Different riders are there. They are going for health insurance policies. And in time to come, when in the month of 3 months back, we have a regulator. Can you name the regulator of insurance industry? Anyone? Can you go to the chat box, write who is the regulator for insurance industry? Regulator for the insurance industry is IRDAI. So it's the Insurance Regulatory and Development Authority of India. Mr. Debashish Panda is the chairman of IRDAI, and they have their head office at Hyderabad. So in a meeting with the CEOs, CMDs of the insurance companies recently, they have given a vision to the insurance industry. They have given a vision that today India is celebrating the Amrit Mahotsav, 75 years of our independence. When in 2047, India will be celebrating its 100th year of independence, each and every Indian will be having an insurance policy in his pocket. This is the vision envisaged by the insurance industry by 2047. So in the time to come, when they have envisaged that every Indian will be having a policy in his pocket, in our pocket, so you can think about the numerous opportunities which are going to come up in the industry in the time to come. And in the short-term run, the industry, the targets which has been given by the regulator to the insurance industry is doubling their premium by next 5 years. So by 2027, whatever the premiums industry got in 2022, those targets, they have to double it by 2027. So they will be reaching out to the people out there, coming out with new innovative plans, new distribution channels, new products, coming out with new offices, new mechanism to reach out to the people, cutting down their operating expenses through intervention of digital technology. Maybe Dr. Doss will be dwelling about that. He will be talking about that in the next coming session. And coming out with opening up new brick and mortar offices closer to the rural population, tier 2 cities, tier 3 cities. Maybe this is how they will reach out to the people. So if the industry has this thing in mind that in next 5 years, they're going to double their insurance premium. So that opens a window. It's opened a door from the young people like you to walk into the industry. And industry is there to welcome you on a red carpet to the industry. The industry which is there to help with a social cause. So when we talk about that, why there is a need for healthcare financing, as we said that 75% of my expenses, the medical expenses, are even today being borne by out-of-pocket expenses. So why we should look for a healthcare financing? Because first, we want to have a quality treatment, and that too at affordable price. How it can be made affordable? By taking an insurance plan, by paying a small premium. The second one is, it's a good thing due to the health, the growing health sector, the quality of life we are getting, education level has gone up. We are living more. We are living more. So two of my requirements, financial requirements will be there. One is who will take care of my financial burden once I retires. So we had a plan. We already discussed about that. The annuity plan is there. And for taking care of my healthcare expenses, the healthcare financing, I can go for a medical policy for myself, the health insurance policy for myself. The inflation, the medical inflation is growing like anything. So 5 years back, what was the cost for getting a treatment for a cataract? It may have got doubled, or if not doubled, maybe 1.5 times more, which I had paid 5 years down back. My lifestyle has totally changed. I'm right now, I'm glued to this screen, maybe listening to what we are discussing here, but my mind may be somewhere else. I may be thinking that in the evening I have one of my assignments which I have to do. Tomorrow I have a lecture, or tomorrow I have a test. So the lifestyle has changed like anything. My food habits has changed like anything. We are skipping our meals. We are going for packaged meals, packaged foods. The traditional foods have been taken over by packaged foods, resulting into new diseases. That diseases which are not going to kill you, but definitely they are going to be with you for a longer period of time, maybe for a lifetime. It can be your cardiac problems, your BP, or it can be a sugar. It will not make you die. It will not let you die, but you have to take pills every day to survive. So my cost of treatment, my cost has gone up like anything. We have discussed about the nuclear family. The size of my family has come down. And I require a financial help through an insurance provider to take care of my financial burdens in case of any unforeseen reason. And yes, health insurance, as we talk about the life insurance, section 80C, we have a tax rebate under section 80D under health insurance policies. Quickly, we'll go through the highlights of the industry. When the industry take a pledge that we will double my premiums by 2027. So what is there? That insurance penetration 4.2 we can see here. So it will be roughly making it doubling, 8.5 by 2027. India's life insurance penetration is 3.2, whereas the global average is 3.3. And non-life is 1%, where the global average is 4.1. In totality, it is 7.4, but India right now, we have an insurance penetration of 4.2%. So what is insurance penetration? It's a premium as percentage to my Indian GDP. It's 4.2% of my GDP. So insurance industry want to double it by 2027. And that is giving you more opportunities, more avenues for the young people like you to join this industry in the time to come. You will be surprised. You will not be surprised to know that our second year students who will be passing out in the month of April 2023 next year, out of a batch of 98, 92 students have already got the placements. The companies have already approached my academy, my campus for the campus placements, and they have already given the placements to 92 students out of 98. So this is giving us a picture that's a very rosy picture for the industry. And you, as you already have the knowledge of insurance with you, there is a industry, the insurance industry, which is there where you can walk in. Insurance density we talk about, the density is the premium per capita. For a life, it's a $59 US. It's for non-life, it's 19, and totality it's $78 US. But look at the average of the world global average. It's $809 US. So we are lacking in that. So when we talk about doubling the premium, in the time to come, this penetration will go up, and the time to come, this insurance density is definitely going to go up. You can see the life insurance industry figures, the new business figures every year for the last 5 years. It's growing on a healthy rate. So life for the last, if you take up into account the last financial year, the growth was roughly around 12.93% over the last year. This is the non-life insurance industry. For the last 5 years, the gross direct premium income is showing a one trend only, that is going up. And the last financial year, the growth was roughly around 11.1% over the last financial year. This is health insurance industry. Gross GDPI. Again, it's a growth. And the last financial year, the growth was roughly around 25% over the previous financial year. So the industry overall growth we talk about is 12.93 in life insurance, 11.1 in general insurance. And if we take health insurance industry separately, the growth is more than 25%. So that is why the people call it a sunrise industry. The industry is going to go at a higher pace. When we talk about that, we have become a fifth largest economy, coming up, new projects are coming up, startups are coming up, manufacturing hubs are coming to India. The premiums are going to go up. When the people are going to get more disposable income, because you people we will be encashing our demographic dividend. When you are going to get into job, with less number of people who will be dependent on us, we'll be having more disposable income with us. We'll be spending more. We'll be spending on us. We'll be spending for buying for us. We'll be spending. A lot of spending will be there. Savings will be there. So the financial sector is definitely going to come up and going to reap this demographic dividend. It's a quick bird eye view. And even that says that not only the premiums are going up, but the number of claims we paid, the amount of claim we paid, it's going up steadily. I can see from here that 5 lakhs, somewhere around 5 lakh crores claims, total claims were paid, because I've taken the figures from the IADA website and IADA's annual report 2021. They have not yet published the last year financial year annual report book. So from the reports which was published last year, we can figure out that 5 lakh crores claims were paid. And prior to that, it was 5 lakh, roughly around 4,60,000. So some 50 lakh crores claims were more paid in the last financial year in compare to the previous financial year. So this is the news I just shared with you, and We all as an Indian are proud of that. You can see the contribution coming up from the manufacturing sectors. Secondary sector is 24.29%. The tertiary, that is service industries, is 53.89%. And the agriculture has 21.82%. The mortality gap, I spoke about the protection gap. When we talk about the mortality protection gap, that about the life is 83%. And in totality, 2019 figures I've taken it from Swiss report that says in India we have a 16.5 trillion US dollars mortality protection gap is there. So what a huge amount of premium we can get in the time to come. So protection gap, and if we talk about the mortality protection gap, the amount of premium which is about to come the industry will be humongous. But for that, we have to reach out to the customers. We have to onboard our customers. And that is where, in time to come, the technology is going to play a vital role. And our next speaker, Dr. Doss, will be talking about that only. So these are the growth riders for the industry. Economic revival, yes, when we talk about the fifth largest economy, and that too with the highest growth rate we are forecasting. The insurance industry is definitely going to grow more at a higher pace. Post-COVID, the society has get more aware about the need for insurance. The digitization is also going to play a vital role in coming and reaching out to the masses, cutting my costs, providing the affordable prices. Of course, we spoke about the demographic dividend we are going to help. The natural calamities, the frequency has gone up, the impact has gone up, and that requires a protection through insurance to take care of those financial losses. The emerging risk, we talk about the cyber risk. For that, the large workforce engaged in informal sectors that can be tapped for providing the annuity plans, the huge protection gap we discussed, the proactive regulator, as we talk about, they have given a vision 2047. Every Indian will be having insurance policies. Next 5 years down the line, they come out with a doubling of their insurance premium. They also recently come out with the thing that you don't earlier. The industry used to have the file and use products. First, you have to file with the regulator, and after that, you'll be given a permission to use that product. But now they say, okay, because you are already there for the last 20 years in the industry, and you have the solvency margins with you, you can come out with use and file projects. You use it and then you file it. So the regulator has become very proactive, and even the government initiatives. Government has taken a lot of initiatives. 2014, they have come out with the Jandan. Then 2015, they come out with PM-SBY, PM-JJBY policies, the Atal Pension Yojana. Then in 2018, they have come out with the Ayushman Bharat Yojana. 17, they have the Pradhan Mantri Fasal Bima Yojana. So they are ensuring that there are social security schemes for the larger masses, for the population of India who lives in the rural area, who cannot afford those plans at the cheaper rates. And this is the opportunity for us. What are the roles as a job seeker or a person who want to get into the insurance industry, who can own these responsibilities? So industry is looking for actuaries. Actuaries are the people who work on the historical data, and even in the case of COVID plans, they on their own they work on the data which was earlier not there, but on a continuous data they work out the plan. They come out, they done the pricing, and they develop a product. The regulator is focusing on enterprise risk managers. So risk managers are required everywhere, not only in the insurance industry, but every industry requires a risk managers. So the people, they can join the industry as a risk managers. Lot of the IT firms who have come for the placements at my campus, they have hired the people for business as a role as a business analyst. So this is one of the field where the people can join the insurance industry. Then the people are looking for the underwriters, the person who assess the risk. The industry requires the people for the operations, the marketeers, they require the people for the marketing, the distributions. A lot of distribution channels come up. Earlier, there used to be individual agents who sell the policies, but now the bank insurance channels, the banks are selling. So the banks require people, insurance people to sell the policies. We have the brokers. Brokers plays a vital role in selling the policies. They work on the behalf of customers. So they look out for the favorable products from different insurance companies for the benefit of the customers. So they have IMFs, their POSs come up, the CSCs are there, the micro agents are there. So a lot of distribution channels are there. Even the people, lot of startups, those who are coming up, they're looking for the people with so human resources. The new startups, new companies who are coming up. So a lot of the companies who have come to the campus this year, they have taken the students to take care of their human resources. And of course, every management colleges want their students to become entrepreneurs. They not only look for the jobs for their own, but they should be able to provide the job opportunities for the different job seekers. They become the entrepreneurs. So this is the opportunity for the industry, for the people like you, like you and other peoples to get into the industry and work in these domains. So quickly, after that, brief about my academy, that is National Insurance Academy. The academy was established in 1980. That was on 16th of December, 1980, under the aegis of Ministry of Finance, the Government of India, by all public sector life insurance and non-life insurance companies. The board of National Insurance Academy includes the members from Ministry of Finance, the chairman and managing directors of all the public sector insurance companies, whether it's a life, non-life, the reinsurer, and we do have the renowned academicians and the professionals as our governing board members. So we are privileged to have these exclusive people as our board members. There's a beautiful campus, 32 acres of campus we have at a prime location at Pune. So we have a unique culture because, as we already discussed, that this is an industry where every person who works in this industry, they work as a social worker. We have a culture where our students not only study here, they reach out to the masses. They go to the villages. They create awareness about the insurance, about the various social security schemes being launched by the Government of India. He goes to the masses. October, November, December, we will be going to one of the villages near Lonavala. We'll be doing the surveys, we'll be meeting the people, we'll be having the street plays over there, meeting the banks over there to create the awareness about the insurance and the financial sector. And we have a curriculum where 50% of the management curriculum, the PGDM curriculum, is based on insurance, and the rest of the 50% is based on the core management subjects. The HR will be there, the finance will be there, the marketing will be there, the IT will be there. And every year, as we keep on developing our curriculum on a routine basis. Right now, this year only, 2-3 years back, we have reworked on our curriculum. This year also, we have come out with a new curriculum because our industry is a dynamic industry. A lot of things are changing. So we, on a regular basis, we keep on changing our curriculum, adjusting to the scenario, the present scenario, the dynamic scenario the industry is facing, the insurance sector is facing, the finance sector is facing, the BFIs are facing. We have a faculty, we are proud of our faculty. The people are from the industry background. The people are like me, they are on deputation from the insurance industry. And we have a core faculties here who are very long experience of working. They are the stalwarts of their domain knowledge. They are the stalwarts in their academic fields. And as we are very close to the industry, we have a very good corporate connect. As you've already we have a proud board where we have the people, the CMDs and the chairman from the insurance industry as our board members, people from the finance ministry as our board member, governing board member. So we have a very good corporate interface with the customer, our corporate world. We keep on organizing the guest faculty. People come to our campus nowadays. They can also join from their MS Teams or a Zoom platform. They interact with the students, and we are proud of that. And the students at first year students, second year students, they will be able to rub their shoulders, get connections with networking with the CMDs, the CEOs of the corporate world. Even today, after working for 23, 24, 25 years in the industry, I may not be able to communicate directly with my CMD or CEO, but these young people, the postgraduate students of my PGDM, they are in a position they can directly communicate with the CEOs, the CMDs of the insurance giants. We are proud of our alumni of NIS. They have acquired higher positions, not only in the Indian insurance industry and financial industry, but they have world over, they have spread like anything. You go anywhere in the world where insurance and finance sector is there, you will find one of our alumni is being acquiring a high position over there, and we are proud of that. So we have a prestigious NIS 2-year PGDM course. It's a AICTC approved equivalence MBA by AIU and accredited by NBA. So what are the minimum academic qualification required to get into admission into the PGDM program? It's required a bachelor degree of minimum 3 years duration or its equivalent in any discipline from a university in India recognized by UGC or Association of Indian Universities, that is AIU, with a minimum of 50% of marks. Students who should be appearing for the final year examination next year can also apply subject to a completion of the examination process. We assume it will get over by 30th of June 2023. But if any unforeseen condition it got delayed, academy may take care of that. What we are looking for, the student should have appeared for CAT or a CMET examination, and they should have got good marks in that. The age criteria is the above age limit is 28 years for general and OBC NC candidates and 30 years for SC, ST and differentially able candidates as on 1st of July 2023. These are our recruiters. You can find out that it's a last year recruitment drive we had, and they're the companies from Qatar, so overseas companies, Qatar insurance companies. They have taken students from here, the Bajaj Allianz, the Aditya Birla Capital, the Swiss Re, the Reinsurer, the Accenture, the IT company, the IFCO Tokyo, the Tata AIA. These are our recruiters last year. The highest international package, the CTC was 29.5 lakhs, and the highest Indian CTC was 27 lakhs. The average CTC was 10.3 lakhs. But as I already shared with you that 92 of my students for the next year who will be passed out next year have already gone placed, and that CTC has gone up. The average CTC has already gone up. So it's a rosy picture for the people who want to join industry, the insurance industry. And I also will be assuming that a lot of the students on the other side who have joined this platform today will be eager to join the insurance industry in the time to come. And we are happy that a young people with a good brain like you should be a part of insurance industry. So it's an invitation for you. We are organizing a insurance summit. It's an annual event being organized by the students of NIA. It's an insurance summit, 10th of October. It's a off-site. We are having it Trident Hotel, Nariman Point, Mumbai. It will start at 10 a.m. on 10th of October, and the registrations will be done at 9:15, start at 9:15 till 5 o'clock. The conference will be there. The CMDs, the chairman from Regulator Insurance, IRDI, Mr. Debashish Panda will be interacting with the audience there. We have a secretary from finance secretary will be interacting with the audience there. The CEOs, the CMDs of the private insurance companies and the public sector insurance companies will be interacting in a panel discussion with the audience there on that day. So it's an invitation for all of you who have joined today that they can become the part of that insurance summit, which is coming up on 10th of October 2022 at Trident Nariman Point, Mumbai. For more details, you can always log into this website of NIA to get more details how you can be the part of that insurance summit. These are some of the important websites as a students, as a person who want to get more information about insurance sector. They can always log on to these websites. The IRDA government gov.in is IRDA website. The Life Insurance Council is there. The GIC Council is there. The Insurance Information Bureau Council, they have their website is there. IIS, International Association of Insurance Society is there. So, and then we have a National Insurance Academy Pune, NIA Pune website is there. So these are the important websites. You can always log into these websites to get to know about this dynamic world of insurance. And we are at the end of our session. So wish you best wishes for your future endeavors. Once again, on behalf of National Insurance Academy, I want to thank the management and the academicians from Shri S.S. Jain College of Women for coming out with this noble theme of creating insurance awareness among the students and the general public on the theme of insurance and the future of insurance and the purpose of insurance. So with this, wishing all the participants a great future, have a great day, and always privileged to be a part of this online seminar. Thank you so much. So if you have any questions, any queries, I can talk on that. This is my mail ID. If you have any queries, even you have some queries right now, because maybe the scarcity of time, you can always give me a mail. I will get back to you on this mail ID. I have given my mobile number also to Madam Sumati. You can get my mobile number from her to interact about the insurance forte, insurance knowledge, insurance industry. I will be more than happy to interact with you students.
Thank you, sir. Sure, sir. I'll forward your mail IDs to the participants if they need any queries. Thank you, sir. Thank you for your presentation.
Thank you so much, ma'am. And after me, Dr. Doss will be joining from this platform, from this side, ma'am.
Yes, sir. Yes, sir. He told that he'll be joining at 11:30.
Yeah, he's there already with me, ma'am.
Oh, okay.
Thank you, sir, for
thank you, ma'am.
Thank you, sir, for the informative session and for showing us the scope and opportunities in the insurance industry.
Thank you so much.
We will now move on to the next session for today by Dr. Stuart Doss on the topic technology in insurance. I request the participants to kindly wait for 2 minutes before the next session starts.
Good day, sir. Can we start the session? Sir, shall we start the session? Good day, sir. Shall we start with the session? Sir, you're on mute, sir.
Yeah, so good morning.
Okay, sir. Shall we start with the session?
Yeah, we can start with the session. Yeah.
We will now move on to the next session for today on the topic Technology in Insurance by Dr. Stuart Dawes. Dr. Stuart Dawes, PhD in Service Quality Management in Life Insurance, has over 30 years of experience in the area of training, teaching, research, and consultancy. He is a professional in general insurance and has also completed a diploma in casualty actuarial science. He is an expert in the fields of actuarial science, enterprise risk management, risk modeling, marketing research, and quantitative techniques. He is a recognized PhD guide of Savitribai University, Pune, in the areas of management, insurance, and transport. He is a member of Risk Transfer Mechanism Committee of Kerala Government. He has published various articles, projects, research papers, and books. Some of his research publications include a study on agriculture insurance penetration in Kerala state, a study on qualitative assessment of cyber risk exposure model. He has organized international seminars in Mumbai on digital disruption through data science and much more. He received Federation of Afro-Asian Insurers and Reinsurers Award for the paper Developing Agency Success Model in Life Insurance. He has published 2 books, over 16 research papers, and has also published over 11 research papers in international conferences. We feel privileged in welcoming you, sir.
Yeah, thank you. So equally, I'm very happy to interact with you all on this occasion of your seminar. And so I thank the organizers of your college, the Sassoon Jain Business School, and as part of the internal quality assurance cell that you are conducting this insurance in the next decade, the seminar team. Okay, so first of all, hearty congratulations to the organizers. I think it is very, very important to create the awareness about insurance, and particularly at this time when the insurance industry is growing at much faster rate. You might be aware, even during the pandemic time, the insurance business was the only sector which had a positive growth in the in about 1 year after the pandemic. So it could quickly recover from the negative the growth rate which our economy also underwent during the pandemic time. So the industry could bounce back, and now currently is growing at the rate of 15%. So that is a clear indication that how our insurance industry is growing in India. And with all that, the insurance penetration is one of the measure to know how the insurance industry is growing, which indicates the percentage of premium to the total the value of the economy, which is currently 4.2%, and which has grown in the last 2 years nearly from 3.2% to 4.2%. So that's a clear indication that the insurance industry is growing very strongly. And if you would like to know about the international the insurance penetration, which is around 7.2%. So still we are lagging behind the international market, but nevertheless we have been growing 15%. And in a country like India, which is fostering a very strong economic growth, I'm sure in the years to come, the insurance industry further, reaches the global average of the penetration. Okay, now with that, I will just start with the topic for this seminar is the role of technology or digital applications in insurance business. So I just broadly discuss about the 5 technologies that are being used in the insurance business currently. Now, one is, you might be heard about them. Now, why the insurance industry is adapting to the digital? The reason is this, you can see from this presentation. Globally, the total amount of data which is being generated today, in the marketplace is around 2.3 quintillion or 175 gigabytes of data. So 1 gigabyte is equivalent to 1 raised to the power 21. So imagine the size of the data that is getting generated. And you can see that nearly 3.2 billion data which is getting generated in the social media, which is really growing at much faster rate. 90% of the people who are in the social media today, they belong to the millennial age group. And if you look at the 25 to 35 years, the bracket, so where really about 90 to 95% of the people who are really active in the social media, that indicates that the future marketing for the organization is there in the social media. And 72% of the total workloads today are in cloud. 81% of the customers depend on the social sites for purchasing their various the decisions, and 90% of the data created in the last 2 years alone. So that indicates that so much of data is available in the web space, and particularly in the social media. So to take advantage of that, right, the insurance companies need to be in the digital space. Before I move further, whether am I audible or any, is it clearly visible, your presentations? Okay, because the digital mode, we hardly see the people, so it's good to check whether my voice is audible to you, the presentation is visible.
Yes, sir, it's clear.
Okay.
We can see the presentation.
Okay, so I'll go ahead and please stop me any point of time wherein you want me to clarify any topics that I'm covering. Okay.
Yes, sir, sure.
Yeah. Okay. So in the quick short time, I will just focus my presentation on this 5 technologies, which some of you might be aware. But I'll just briefly explain what is this technologies and what are its applications in the insurance business, more particularly. Now, I'll start with the blockchain technology. As the name says, blockchain, what does it indicate? So it indicates that there needs to be a consortium of people. Blockchain is a technology wherein the parties who are in the business, so everyone they create their own blocks, and then each block is interconnected, linked to each other, okay, with a tool called hash pattern. Okay, and what is the advantage of this blockchain? So it's similar to the way that we use the WhatsApp, or the way that we use Google document, right? So when you open a document, the same document where multiple users can access at the same time, this is similar to that, but only the advantage of the blockchain is that all the required parties of the insurance contract, they can come onto the blockchain, and they put in whatever the information that they want to share across the other partners. The reason is that many times, when a transaction is done in an insurance business or in any business, always, the one party requires the information from other party. For example, for an insurance contract, now the insurers now provide the policy related information, but they require the customer related informations, right? Like their personal data, their income level, what is the risk that they want to protect. So these informations they want. Okay, so unless customers provide this information, so insurers cannot really underwrite the policy, or cannot really issue the policy to them. Okay, so for any transaction, you have a buyers and sellers, both have to provide their information. But here is the platform where all the intended parties, for example, in an insurance business, it's not like any other shopping, that you do, where just 2 people are there, that's good enough. But for an insurance business, you require, other than the buyers and sellers, you require the health service providers, because the insurance requires a medical checkup or a health data of the customers. So you need the health service providers providing that health information of the customers, or if medical examination to be done, and you require a physician, doing the medical examination and providing that medical information of the customers at the time of underwriting. Similarly, they require the financial information of the customers to decide about the insurable interest, or what should be the coverage or the sum assured for a customers, which is appropriate. Okay, so that's why the insurers requires multiple party. For example, you can just think of the life insurance or a health insurance contract, right? And in order to successfully enact this contract, you can see on the left hand side, you require third-party service providers. See, today, the health insurance or the life insurance, the medical claims or the life claims are being settled using the TPAs, okay, third-party administrators. So they are the professionals and who interact with the hospitals and who process the claims, okay. So you have an entity called third-party administrators, and then you require the customers, okay, who provide the customer their personal information or their income related informations or their health related information. Then you require a health service provider who can do in case if the customer falls sick. Now health service provider can take care of his health or provide the treatment. Then there are regulators, like in India, we have the Insurance Regulatory Authority of India, what we call IRDAI. Now, every product that the insurer designs and introduce in the market requires a regulatory approval. And then whatever the terms and conditions that the insurer put in the policy has to be comply with the regulations. So you need the regulators approval for any changes that you want to incorporate in the policy. And then you have the medical practitioner. So at the time of taking a policy, the person may need to undergo a medical checkup. So you require the practitioner's assistance also. Then regularly he has to go for a medical checkup. So a diagnostic center or a medical laboratories service also required. So you can see that in order to have a smooth transaction of health insurance or a life insurance, you require the multiple parties, okay, to provide the required information. So blockchain enables the seamless transfer of information across these entities in the consortium. That's why in order to have a blockchain, we need to have a network of the people who are part of that contract, insurance contract. So you need to have a centralized consortium for successful the enactment of the blockchain technology. So this is the basic the details about the blockchain, the functions of the blockchain, and why actually it is essential in a contract like insurance. Okay, because the blockchain enables the correct data to be entered. So whatever data that every party who are in the contract, when they are entering the data in the block automatically verifies the data. So you can't enter any false information. For example, if my name is Stewart and my age is 53 years and I am working with the National Insurance Academy, when I provide this information in my block, so the block validates this information either from my Aadhaar card or from my the college or the institutions where I'm working. So it has to cross-validate that information. So that's why the informations which are stored in the block, they are authentic information and they are verified information. So what is the advantage of that? The advantage is that the data is error-free. So when the data is error-free, you will see that later on, whenever any kind of a new technology which is adapted by the insurance company, now they require this data to be error-free so that the analysis can be done. Otherwise, whatever you do with the data, if the quality of the data is poor, the output that you get from the analysis will also be equally poor. So it would not be really useful to the insurers. So in order to have the correct the information or insight based on the data, we need to have the correct data which is available in the blocks. So blockchain ensures that. One. Second, blockchain ensures the authentic flow of the data, seamless flow of the data across the parties. And it enables what we call is smart contract. Smart contract is 100% digital contract. So imagine that you want to take a policy and wherein automatically the insurance is done. Okay, whatever the informations that is required to take a insurance policy. Let's assume that you want to take an health insurance policy, right? So whatever informations that you require for taking the health insurance policy, the block automatically provides that information and validates that information. And since all the intended parties are there in the blocks, so the contract is designed virtually, digitally, and then the policy is issued automatically. The premium is debited from the customer's bank account automatically. Similarly, when the event, whatever the peril the insurance covers, on happening of that peril, the peril is, the claim payout is automated. Okay, so it is that's why the smart contracts are becoming popular in India. The couple of smart contracts are in place. We have what is called flight delay insurance. I'm not sure whether you heard about it. So when you are doing your ticket booking, any of the travel site, when you go through, and there is an option that you will find what is called flight delay insurance. And if you take that insurance policy, where if the flight is delayed more than 2 hours, automatically the claim payout, whatever is the pre-agreed, the amount of payout or pre-agreed amount of the claim is credited to the customer's account instantly. And how it is done? So where the insurance company system is integrated with the air traffic management system. The air traffic management system contains the departure and arrival data of all the airlines. So which picks up the information automatically. The moment the aircraft lands 2 hours late, and automatically the insurance system notifies the claim, and then the claim gets approved digitally and the amount is credited. So this is the scenario where we are seeing the applications of blockchain. So in the coming years, the insurers in the developed markets, particularly in UK and in Europe, so they had already designed this blockchain contract, the smart contracts in reinsurance, in health insurance domains. And what we foresee in the coming years, probably all the simple line insurance policies like life insurance or term insurance policies or health insurance or motor insurance or a travel insurance, all kinds of personal line insurances would be based on a smart contract. So this is where the blockchain is going to trigger the smart contract developed by the insurance company. And already you might be aware that RBI has approved use of blockchain in the banking sector. So we are expecting that anytime the insurers in India would also roll out the usage of blockchain. And this will provide innovation in the insurance business in a very big way. And the blockchain would also help in reducing the cost, because the transaction is done instantly. So there are no administrative cost which is involved in the smart contract. And the errors, since the data doesn't contain any error, so the processing, the automation of the insurance also takes place instantly. And also it is well aligned with the various multiple partners in the blockchain. So the regulatory compliance or any kind of audit and the compliance requirement across the different regulators can easily get verified. So these are the advantages of blockchain. So the industry is in a way to develop the blockchain contract. Very soon you will hear there are few insurance companies who had already tested the applications of blockchain, and very soon you will find that the product using blockchain will be rolled out. Okay. Now, after this blockchain, the next is the Internet of Things. You might be aware the Internet of Things or nothing but a device which contains a microchip, right? So today, whether you are buying a television or you are buying the refrigerator or you are buying your watch, every device contains the IoT, right? So IoT refers to the device which with the embedded sensors, right, and which has the software which allows the data to be transferred through the GPS or automatically to the web server. Now, there are many insurance companies. They have implemented the IoT devices for various the functions of insurance. Now, one of the device that you might be aware is called telematics. Okay. Now, telematics is a device and which can be fitted in a car. What does telematics do is when you are driving the car, it records your driving history. Okay, and so it records the kilometer that you drive, how you drive your vehicle, how frequently you are applying the brakes, what is your acceleration rate. So all this, the history of your driving is captured through a small device and which has this IoT sensors. And what it does, it transmits that data through the GPS to the web service provider. Okay. And what is the advantage to the insurers? Now, if insurers can use this telematics data, and they can design innovative covers. You might be aware that there are companies who have launched products like, pay as you drive. Okay, it's a new concept where you pay premium for the amount of kilometers that you drive. Suppose in a year I drive my vehicle only for 30 days, then my premium is charged only according to my the kilometer that I drive in a year. This has been implemented, tested by a few companies, and they rolled out this policy called Pay as you go. Okay, and like this, a lot of innovative insurance can be developed. There's another the application of IoT sensor. You might be aware that there are Fitbits, right? Which we are all using, like all youngsters. All of you might be using that Apple Watch, might be using the Fitbits, right? So what does it do? It captures all the physical parameters like heart rate, blood pressure, how many steps that you walk, right, in a day. Now, how can the insurers use this information? Now, the Fitbit now captures this data, and this data can be uploaded to the insurance company on a regular basis. And based on this, the Fitbit data, the insurer can monitor the health of their customers. And as a result, and they can offer a better coverage to the customers. For example, today, if anybody is having pre-existing diseases like hypertension, diabetes, any kind of pre-existing diseases, then the health treatment, when the person is hospitalized, suppose if he is having diabetic and if he is hospitalized for diabetic treatment, then the health insurance will exclude that treatment cost of diabetes. It doesn't cover up to 3 years. So now there are insurance companies like standalone insurance companies who have devised an insurance called wellness insurance, wherein they collect all this the data through the Fitbits, and they cover persons with any pre-existing from day number 1. Okay. Now this is the advantage. Now this is called, there are covers like disease management cover, wherein the person may have any kind of ailments, but the health insurance can cover the person's ailments right from day 1. So the person need not wait. Otherwise, as per the current provisions in health insurance, that many of the indemnity based policies starts providing the treatment of the pre-existing only after the 3 years or particular period. There are companies who are offering these services after 1 year, after 2 years, after 3 years, like that. So these are all the advantages of the IoTs, and in the years to come, I strongly believe that the insurers will use this IoT devices in various functions. Particularly, there was a research done in the Japan, and where they find that people who are using that health applications like Healthy 5, there are many health applications today available. And their study says that people who are using this, the applications, healthcare applications, and they find that the fitness level has improved really after these applications. So this will help for better underwriting. Okay, the IoT can collect a lot of information. For example, today you have the home security devices available. So you can put the home security device at your home, and that home security not only monitors the security of your home, right? And it also can signal, suppose if there is a smoke coming out in the house, directly the IoT device can inform the nearby the fire brigaders, and also will inform you through the mobile phone. So these are all the various services, value-added services, which can be developed by the insurers. Today, for example, if a vehicle meets with an accident on a highway, suddenly, if we are using telematics, the telematics can inform this automatically to the nearby hospitals, and also inform simultaneously the insurance companies and police. So at no time is wasted, the person can be taken care. So these are all the advantages of the IoT devices, which I strongly believe in the coming years that insurers will start using. Okay. Now, we all know about artificial intelligence. The insurance industry has also implemented artificial intelligence in a very big way. Now you can see a lot of companies like Lemonade, Progressive. These are some of the international insurance companies who have implemented artificial intelligence 5 years before. But even in India today, a lot of companies, new age companies, they are implementing this artificial intelligence. Now we will see what are the applications of artificial intelligence, right? And how they are used in the insurance business. Okay. Now, of course, you know that artificial intelligence can be used in the every functions of the insurance business, whether it is underwriting, whether it is pricing, product development, claims management, or a fraud detection, or a training and development, or a supply chain management, human resource management, providing better customer experiences in various other functions. Okay, but insurance, it can help in a very big way in improving the underwriting and the risk management. Now, how it can help for better underwriting? Now, today, there are applications, like one of the applications is, you might be aware, the facial recognition. Now, one of the insurance companies in India, now they are using the facial recognition, wherein you want to take insurance, what you have to do is just to take a selfie of your image and upload in the applications, and your insurance is done. Okay. Now, this is as simple as that. Now, similar to this, there are like even the claims. If there is an accident, what you need to do is just take the photograph of that accident and upload in the applications provided, and your claim can be settled instantly. These are all the applications that we are seeing today in the Indian insurance industry. The companies are really trying to provide through. Now, you know, one of the functions of artificial intelligence is predictive scoring. Okay, so you are well aware that artificial intelligence has got 5 different applications. One is called machine learning. You might be aware of it. So what machine learning does is, based on the historical data, it can provide the predictive score. Okay, it can provide the predictive results, whether it is early death claim or is a lapsation, policy lapsation. Okay, or is it the what type of policy the customer will buy, what is the risk profile of the customers. All this can be developed using the the predictive analysis given by the machine learning. Okay. Now, the second application is what you see is the deep learning. Okay. So the deep learning is slightly different from the machine learning. Okay. In machine learning, where you input the data and based on the historical data, and the machine understands the pattern, and based on the historical patterns, historical trends, it gives the prediction or the likelihood scenario, right? Like suppose if somebody is not paying the premium on time, so the machine can predict that what is the likelihood of his the next premium payment would be. So whether when he is likely to pay the premium, will he pay the premium on due date, or will he requires reminders to be sent to him to really pay the premium? So all that can be predicted based on his past behaviors. That is what the predictive analysis does. But what does a deep learning do? Deep learning can do one step higher than the predictive analysis, where I can input more than 50 parameters. Okay. And it can study the interactions among the parameters, and then can give me the likelihood scenario, or can tell me that whether the particular proposal is likely to result in a fraudulent claim or not, or whether when the claim is reported, whether the claim is going to be a genuine claim or the claim is going to be a fraudulent claim. Now that you can easily detect using the deep learning analysis. For example, we had used the deep learning analysis. There are a lot of algorithms that are used in the deep learning. One of the popular algorithm you might be aware is what is called is neural network. Okay. Now there are multi-layer neural network functions today available. Now, one of the neural network function we have used in our recent cyber research. For example, if an insurance company wants to determine what is the exposure, the cyber risk exposure in a particular industry. Let's say the industry may be a financial institution or a banking or a insurance company or a manufacturing sector. Now, the company wants to know what is the cyber risk exposure. So if I want to determine the cyber risk exposure, now what I need is I need multiple parameters. Like I need the cybersecurity, the vulnerability of that particular company, and I need to know about their awareness level. I need to know about what are the threat probabilities of various cyber risks happening. Like what is the threat probability of phishing attack? What is the threat probability of ransom attack, or a malware attack, or man-in-the-middle attack, or what is the probability of spear targeting, or tripjack attack? So there are multiple the threats which are now impacting the industry. Now I require more information if I want to determine what is the likelihood of cyber attack happening in a particular industry. Okay, so for which I need to use this deep learning. So deep learning, what it can do is deep learning allows for interactions with all these variables. For example, in our research, we have used 60 variables, 60 risk indicators, and which can study the correlations among the 60 indicators. And based on these indicators, it can give me what is the likelihood ratio of cyber attack in a company. And if a cyber attack happens, what is the possible amount of a loss that the particular cyber attack will trigger in a particular company that I can estimate. Now, if I can estimate these two information, I can easily determine the premium rate for that particular sector. Now, this is what a deep learning function can do. Similarly, deep learning can provide the likelihood of fraudulent claim based on some 20 indicators, based on 30 indicators. Okay, so this is the second application. The third applications that you come across in artificial intelligence is what is called NLP, the natural language processing. Okay, now, for example, the functions of your Alexa or Siri or Google assistants, Now, they all use NLP function. So what it does, when you speak to that machine, the machine understands your language and converts your language into the machine language, right, in a 0 1s. And then it decodes that again back to your language to respond to you back. Now, this is what we call the applications of NLP. Now, can it be done in the insurance company? Yes. Today, your phone call can be recorded and your phone call can be taken as the information that is required for taking a policy. So whatever the voice recording which is done, that can be converted automatically into the insurance requirement, and the policy can be given. So you want a policy, you can speak to the machine, you can get a policy. Now, this is what they are now trying. You might be aware that Japan already implemented a robotic-based service in a restaurant, right? And Japan, I was told it's North Korea or Russia, one of the countries, they are developing a totally AI-based robotic soldiers. Okay, and recently you read a news which said that it killed about 38 civilians on a trial. So what they are trying to do is develop a robotic soldier. Now, in case of a war, you will find this AI-driven robotics will fight against another machine of your enemy country. So this is what is today happening. So they are all using the robotic automation in a very big way. We will see the applications growing every day. Today, they are testing the robotics, which can mimic you, which can understand your behavior, which can understand your feelings, and which can respond to you back in the same way. This has been already tested, and in some of the restaurants that they are already using them as the service providers. Okay. So, so the similar function, this is what is called NLP function. And then you have what is called metaverse. Okay, metaverse uses augmented reality and virtual reality. I will come to that augmented reality a little later, how this can be used in the insurance company. Okay, so I talked about the telematics earlier. Now, how telematics can help in the insurance company, right? Now, this telematics today, the telematics are available with the video sensors. And what it can do is it can, assess the driver's sensitivity and while he is driving the car. And if he finds that the driver is tired, physically tired and fatigued, and it can advise the driver to take rest and then drive later. So all these functions are now being tested with the help of the AI. This will possibly reduce the accidents, and this will reduce the insurance claims in the near future. This is where we are seeing the applications of AI. Okay, and as I said in the beginning, AI also can help in risk-based underwriting, because what you require today is a personal risk information. So the the Internet of Things, or the bots, the smart bots. Now you interact with the bots or interact with the robots. Now they collect your personal information, and based on the personal information and the risk profile of the customer, exact customization of the insurance policy can be done. Now, this is where we are moving towards. Now, tomorrow you will see already there are insurtech companies in India who are designing this kind of an individual based insurance. For example, there is one insurtech company which is offering insurance based on the location, based on your mobile locations. So what it does is once you take an insurance, only it just takes your mobile, the location, and link to the mobile locations, and then wherever you go, your insurance is done automatically. So for me, there is no need to take different policies at a different period of time. What I have to tell is I have to give my requirements at one time, and then this insurance company, based on my location, if I'm on a tour, so it will automatically design my travel insurance for that. Okay. Similarly, if I'm sick, if I'm hospitalized, and automatically it covers my hospitalization. So there's no need to inform because it identifies based on my mobile locations that where I am. So accordingly, that if I'm on a leisure trip, if I'm on my hobby, probably mountaineering or doing a trekking, now it can cover my accident risk during the trekking. Exactly. So if I'm doing cycling, it can cover my personal accident risk during my cycling. Now, this is the kind of individual based insurance is now what is being tried. With technology, it is possible today because you are totally connected with your mobile, you are connected with your IoT sensors. So it is possible for an insurer to assign a risk score and cover a person's whatever insurance requirement that he has. Now, this is one applications that recently one of the insurance company in India, they have done. It's a very interesting analysis that they have done. What they have done is, you can see on the left-hand side, they just studied the correlations between the person's claims history in the past and what is his likelihood of accident rate. Now you can see that the more the number of accidents the person had in the last 5 years, and you can see that his future incident rate also increases. So his premium can be based exactly on the basis of his driving history or the claim history. The another analysis, now you can see that the company used the credit score. You know, there's a CIBIL credit score. When you go for a bank loan, the bank uses the CIBIL score. And if your CIBIL score is good, like more than 800, the bank gives you the loan instantly. Now, the same score, can it be used in the insurance? Yes, that's what this company have done. So they carried out an analysis using the credit score, and you can see the results. What it indicates that the poorer the credit score, the lower the credit score, the health incident rate, the morbidity rate of the person is higher. So you can see that the lower is the score. If the score is lower than the 500, the morbidity rate, the health sickness rate of the person is 34%. Now, what does it indicate? What does the credit score indicate? The credit score indicates that your credit worthiness. What happens physically when you are having a high credit worthiness, right? Your mental state of mind would be peace, and your physical fitness level also comparatively is better. So your sickness rate is lower. And when your score is lower, what happens is you are indulging in defaults as a result, that you are always in a depressing mood, and which impact your stress level and which contributes to the higher incident rate. This is what their analysis findings are. And it's really too interesting to find that how different scores can really be associated with. Now, you can see in the other analysis, the strong correlations with the customer age and the motor accident rate. Now, you can see that the younger the person age is, the motor accident rate increases to 33%. Now, these kind of analysis can be done. These are all nothing but the predictive analysis, what we talked about, the machine learning algorithm. Okay, so the various the functions of artificial intelligence today being used in the insurance industry. Now, this is one of the model, okay, used by New York Life. What it does is, this particular model where you just upload your selfie, okay, and your insurance is done. And this model assess what is the likelihood of early death claim in a person. based on his behavioral data, based on his past historical the medical data, and also based on the financial history of the person. Now it can predict the lapsation of a policy. What is the likelihood that the person will discontinue the policy, or what is the likelihood that the person will commit a fraud? Now all this can be easily detected using this kind of algorithm, and which are put into use by some of the insurance companies already. And I see that already some of the Indian insurance companies are also using. Now the another function where artificial intelligence will really help the insurance company is the claims management. Okay, now how does it help in faster claim settlement? Now today, as I said in the beginning, what you need is just take the photograph. If there is an accident, you just take the photograph of the accidental spot, and damage to the vehicle or damage to the person, upload it in the app. Your claim is settled based on that image. This is what is done by the what we call is image analysis. Okay, that's another function of artificial intelligence, what is called computer vision. Now this computer vision can be used in a insurance, whether it is a claim settlement, whether it is the theft of a car, whether it is an accidental claim or a death claim. What is required is you can just take a photograph, upload, and your insurance can be done. Now, one of the insurance company in India, now they have developed this application. You can see that applications. Now, in case of an accident, motor vehicle accident, so what they have to indicate, so they just have to indicate that where does the accident happen. Just take the photograph, and this application, what it does, when you capture the accidental damage of your vehicle, they provide you that what are the different angle in which that you have to take the photograph, and you upload that. Okay, and secondly, it also records the latitude and longitude of the place, and also these are the GPS coordinates. So that is captured along with that. So there is a evidence saying that where the accident takes place and what is the surrounding of the place. Okay, and so all this information, whatever the required information for a claim settlement is done. Now, when you upload the photograph, what does the computer vision do? Now, it just analyzes that, it compares the image, the accidental damage of the vehicle with the stored images which are there in their database. For example, there is a company called Autodex, which is a US-based company, and now insurers are collaborating with Autodex. Now, what Autodex has done is it has built a database of the spare parts, the motor vehicle spare parts of various types of vehicle. So whether it is Maruti, whether it is Hyundai, whether it is Toyota, or any company or any model, for all the models, the spare part costs, the invoices data is already available with the company. Okay, and for last 10 years. Now what it does, and also the insurance company has the photograph of the accidental vehicles, right? So what the machine does, suppose say if the vehicle which meets with an accident, let's say it's a Hyundai Accent car, right? It just checks the similar vehicle, the similar model, which is there in the database with a similar accident. It just compares it. And then the software assesses the damage. What is the percentage of the damage? And it uses the simulation, which can tell you that if there is a front-end damage on the vehicle, what are all the parts which will get damaged? And what would be the extent of damage? For example, if the collision impact is, let's say, 100%, or collision impact is 70%, then they know that these are the parts like the bonnets or the radiators, the front side headlights. So they know that these are the parts will have 100% damage. Okay, so and they already have the cost price of those spare parts in the system. So what the system does, based on the damage, it gives you the value. What is the value of the damage? Okay, and what the insurer needs to do is to just to take the sum total of all the parts which are damaged, and the cost is added together, and your claim amount is arrived instantly. Now everything is done in less than 1 minute, and there are companies internationally, they settle the claims less than 1 minute. So what you need to do is just take the photograph of the damaged vehicle, upload in the applications, and the application process your claim less than a minute, and then instantly you get a notification on your mobile saying that this is the approved claim amount, and this is what is payable to you. And if you want to, if you are okay with that, you say yes to that, your claim is credited instantly to your account. And you want a vehicle to be repaired, and it can give you directions that what needs to be done. So this is what is being tested, already implemented in India. And this is the application of image analysis. Now this can be done if it is whether it's a life insurance claim. Now a person dies in an accident, just take a photograph of the person who died and upload it, and the claim can be done. It may be a crop insurance claim, where just take the photograph of the damaged crop, upload in the app, the insurance claim can be determined. Now, this is the app that I talked about. Okay, so this has been already in place in India. We have implemented that successfully, and I see that the future claims will use this computer vision in a very big way. Already traffic management systems in a city is being used by the computer vision. Okay, now what kind of the next is what kind of product innovations the artificial intelligence or the digital the applications will drive in the future. I already talked about flight delay insurance, already talked about location based insurance. Okay, lifestyle based insurance, what you call pay as you live cover, or pay as you drive cover kind of a thing. Now, I just to give you one more example of product innovation, which is based on artificial intelligence, that is called parametric insurance. Okay. Now, in India, last year, 2021, this parametric insurance was designed by Swiss Re. So Swiss Re is one of the a leading global reinsurance company. Okay, and they designed for a Nagaland government. You can see this. Now, what is parametric insurance? See, the insurance is based on certain parameters. Okay. Now, for example, you might be aware of crop insurance. Now, today, crop insurance, there is an insurance scheme available to the farmers, and who can cover the damages to the crop through the insurance. That is what is called crop insurance. So if there is a shortfall in the yield happens to the farmer, experienced by the farmer, if his crop is damaged due to any unseasonal rainfall, if the crop is damaged due to pest attack, if the crop is damaged due to the hailstorm, okay, the compensation is paid to the farmer. That is what is called crop insurance. Now, the crop insurance, the challenge is that for working out a claim payouts, the insurer requires the yield data. Okay, and this yield data is estimated based on crop cutting experiments. That is done by the in many states. It has been carried out by the agriculture departments. In some states, it's been done by the revenue authorities. Okay, and because the government carries out these crop cutting experiments, and it takes time, and based on the crop cutting experience, the yield data is estimated, and the insurer requires this yield data. And how the claim in a crop insurance is assessed is you compare the actual yield, which is estimated based on the crop cutting experiments, and with the average yield or a threshold yield, which is like a expected yield. So you compare the actual yield with the expected yield. If there is a shortfall in the yield, suppose if there is a shortfall of 15% yield, and that 15% is applied on the sum assured, the sum assured is 10,000, the shortfall in the yield is 15%, the claim that would be paid to the farmer would be 1,500. Okay. Now, this is what currently is done under the crop insurance. Now, there is a parametric insurance cover which has been developed by the insurance company in crop insurance. That is what is called weather-based insurance. What is done here is they identify the proxy indicators, which is highly correlated with the yield of the crop. For example, if you take for instance like crop like paddy, now the paddy crop yield is strongly correlated with the rainfall in that location, in that field. Okay. So if the rainfall is normal, if the paddy receives the normal rainfall during the developmental stage, and the yield of the crop expected to be normal. Okay. So now what the insurer has done, they developed the weather indices, and based on the weather indices, the claim is settled. This is what is called kind of weather-based insurance, which is a parametric insurance product. So parametric insurance means where there are certain proxy indicators which are used for assessment of the claim, wherever there is a difficulty in getting the original data. Now the parametric insurance can be used. Now the same model is applied in case of flood insurance. That is what the Susri has designed for the Nagaland government. Now you can see the structure of this, how it is done. Now what they have done for the entire Nagaland state, for different locations, they created a kind of a rainfall grid. Okay, location-wise rainfall grid. And that rainfall grid indicates what is the historical rainfall in that region. Okay, and what is done, based on that, they developed a kind of an index level, saying that, okay, if in that location, if a maximum of 7 days for a consecutive 7 days period, if the cumulative rainfall is exceeds 385 mm, and they know based on the historical loss data, what would be the percentage of the loss. Okay. And accordingly here, the payout, what we call compensation, is worked out. Now, this is very simple to administer. So now they have created this kind of a strike points. You can see here, the strike point 1, where if the cumulative rainfall in that particular location during the last 7 days exceeds 385, less than 405 mm, 15% of the sum assured is paid as a claim. Now, similarly, if the cumulative the rainfall exceeds 405 up to 435, then 45% of the sum assured is paid as the claim payout. And if it exceeds 435 mm, 100% of the claim is paid. Now, this is what you call parametric insurance. What is the advantage of parametric insurance is the claim can be settled instantly based on these parameters. Today, what is the advantage? You have the satellite images available. Based on the satellite data, now the actual the rainfall can be obtained apart from the IMD and automatic weather stations. So you have the satellite data available, and today we have INSAT 1A, INSAT 1B, which are free software. Okay, so they are the European software. They are the free satellites, and they rotates once in every 15 days. So there are multiple satellites today rotates our Earth, and which provides the data on a continuous basis. Now these data are freely available. What the insurance company can do is they download this data and they compare this. It's just one example. The same way that if you can measure the wind speed data, based on the wind speed data, maybe hailstorm can be insured. Based on the cyclone data, a cyclone can be covered. So in Hong Kong, in Taiwan, what they have done is based on a similar structure. So they have designed parametric insurance covering the cyclone risk impacting the infrastructure of the country. For example, some of the important locations of the country, they covered this kind of parametric insurance where they know based on the satellite data if there is a landfall of the cyclone, and if the landfall strikes at a particular point, and what would be the damage within 5 to 10 kilometer radius. Similarly, if the landfall is far away from the location, then what would be the damage to the property which is located in that location. Now, these can be to a large extent assessed based on the satellite data. So insurance can be designed based on this satellite data, and that is what is called parametric insurance. Okay, so this kind of insurance are becoming very, very popular today. Though in India also, we tried this particular one is working out successfully. Then the artificial intelligence can help in fraud detection and control. As I said earlier, okay, it can predict the fraudulent claims. Now, what they do is they develop an algorithm with the red flags of various fraud indicators. Now, in India, LexisNexis is a company which started this project on fraud detection in a very big way. And they collected the data, and based on the data that they could, identify that the possible fraudulent claim in advance to the insurance company so that they can save huge amount of leakages. Now, you can see how the technology can help in identifying the fraudulent instances in insurances. Now, which can be triggered by a red flag. Okay, you can see if there is a claim which happens within 30 days from the inception of the policy or 15 days from the inception of the policy, then those claims can be called as a close proximity claims. And in such a case of a claim, if it is reported, probably the insurer can really call for further investigation, further information. Similarly, if the motor accident happens near the midnight, then you can red flag it. Similarly, the customer who had already claimed the accidental the claim earlier, and he is putting up again the second claim, then probably you can call for a further information. The customer with a high sum assured putting up a claim, or the claimant is not insured. Many times what may happen, his friend is one of his family members, he registered a claim. Now, all those cases can be called as suspicious. Now, based on further information, not based on just one indicators, but they can see the other indicators. For example, if more than 2 claims reported from the same mobile number, or all claims are reported with pre-inspection report, all claims are reported with complete documentation. So then you doubt, because if all documents are correct and if they are submitted well in advance, then there is a chance of a fraud. That is what the system does. So what it has done, it has used the predictive analysis, and based on the historical fraudulent claims which happened in the past, it tries to locate what are the various activities or factors which are correlated with that, and they can be red flag. For example, the hospital location is far away from the insured resident. That means that the person is preferring a claim from particular hospital. So if the claims are happening from the same location, now more than once for the same customer or for within his family, then probably you can smack a fraudulent claim. So these are the things that possibly can be done. Now, this is what we call is again an image analysis, which is really done by an insurance company with based on the technology. You can see this is simply an OCR technology, objective character recognition. What they do is today the machine learning, the artificial intelligence algorithm uses the OCR technique. You might have seen all the department stores, they use the scanners. Okay, so if the scanners, if they use AI, particularly if they use the deep learning analysis, what it can help. So it can automatically, flocks the required key information, what the insurer requires, and it can translate that information from the transaction history to the insurer directly. You can see on the left-hand side, you can see the next slide, where you can see the handwritten claim form is there. There is a policyholder who is putting up a health claim to the insurance company, and which is totally handwritten. What the system does, that using the OCR, objective character recognition, it converts this kind of handwritten, the characters, into a machine, the characters, and you can see that automatic conversion here. And also it gives you what is the accuracy level. So if the accuracy level is more than 80%, if it is more than 90%, then you can really help that. See, this kind of application is done in the insurance company in case of a claim, how fast the claim can be settled. Now you can see here, this is a medical report, this is a laboratory report of a particular customer. What the system can do, it can just go into the field. You can write an algorithm and capturing what are the important the health parameters that you require for processing a health insurance claim, and what the machine can do, it just reads that report and picks up those data automatically and then stores it in your system. It's all done within the fraction of a second. So this kind of analysis now putting into use, faster the claim settlement. Now you can imagine that the system can automate the claim process, entire claim process. Now this is the key where what we call is KYC verification, know your customer verification. So if you are taking a loan, the bank does the verification of your personal identification. Similarly, the insurance company also needs to verify your personal information through Aadhaar card or through your passport or various other information. Now, this can be done using this kind of a deep learning analysis, where it can analyze an image, it can analyze a photograph, it can analyze unstructured data, okay, and instantly, and then convert that into the required data. Now, this you can see that what the system can do is, there are data, you might be aware that every insurance company, as per the regulation, now they need to furnish certain their performance related data on their website. This is called non-disclosure agreement. Okay. Now this kind of a data is available in every insurance company website. Now what this image analysis algorithm can do, you can trigger what information you want. It can scan the database of all your competitors and then can give you the performance indicators. Now, these analysis, this report is generated by the system. They are custom driven reports, and it is done in less than a minute, instantly. Now, these are the applications that are done using artificial intelligence. This is the last one that I come to, augmented reality. You might have heard about virtual reality. Virtual reality is a kind of a 3D that image that you see, which gives you the actual experience or gives you kind of an virtual experience of a particular place. For example, if you want to visit, let's say, a theme park in Los Angeles, okay, now it can give you a feeling as if you are in the theme park, right? And that is what actually the virtual reality can do. What do the augmented reality can do? Augmented reality can actually, the signal can penetrate into maybe the smaller size of machine. Suppose if there is a breakdown of a machinery in a workshop, what augmented reality can do is the signal can be sent through that, and it can find out what went wrong in the machine. The machine which is damaged could be a nanoparticle, but this augmented reality can scan those images and can give you the augmented image of those machineries which are damaged. Now, can it be used in insurance? Yes, it can be used in insurance in a big way. Today, most of the property insurance claims are settled based on the survey, wherein if there is an accident in a factory, if there is a fire in a factory, if the factory is flooded, what the insurance company needs to do, the insurance company has to appoint a surveyor. The surveyor will visit a spot and carry out his investigation, prepare a survey report and submit to the insurance company what is the cost of the damage, what is the value of the property which is damaged in that particular peril or accident, and whether that peril is covered by the policy. All that recommendation the surveyor gives. Now, the same thing can be generated through the augmented reality. How this can be done? Now, this also like a 3D image which can be fitted in a drone, and you can drive the drone. And today the automatic drones are available, where you can set the timing of landing and where the drone has to go. Everything can be pre-programmed, and then the drone can be driven exactly to the same spot, and it can fly through the areas and take the picture on a live real-time basis and can send you those images. And the surveyor or the insurer sitting maybe 100 kilometer or 1000 kilometer away can visualize those damages, can do the machine can do the assessment automatically and give the report to the insurance company. Now, this is being put to use in other market, but in the Indian market, it is yet to be implemented. But what I see in the near future, the insurance companies would be using augmented reality in a very big way. Augmented reality is a very useful technique which can be used in a training, in any kind of a technical training, because which can give you a simulated the image of a particular machinery or any kind of a disasters which strikes. What is the likely situations? It can really provide you the real life insurance similar to that. This is what the augmented reality can do. Now, just a few applications of this, what some of the insurance companies have done. This is one of the Indian insurance company, what they have done. This is based on the satellite images. You can see here, it is for the Gujarat state. They had actually classified the regions in accordance with the various disaster risks. Like the regions which are highlighted, by red color, it can indicate that they are vulnerable for earthquake. The regions which are highlighted by the blue color, yellow color, it can indicate that they are really vulnerable for floods. Those kind of the vulnerability. This is what is called vulnerability index of the region. So today, with the possibility of the satellite, you can see for the Gujarat state, the yellow color which highlights the flood zone. So this can be done on a pan-India basis, or it can be done at a district level or at a zone level or at a state level. Now, this can clearly help the insurance company. You can see this is the actual, what we call as the Google Earth, the images which are downloaded based on the satellite, and they link that through their insurance data. So this is the picture of Ahmedabad city, and you can see the Sabarmati river which is flowing there, and the blue dots indicates those are the insured units. Insurance company can identify that what are their insurance units which are located near the floodline, near the riverbed. Okay, those are the regions, those are the units which are likely to be affected in case if there is a flood. So this helps insurance company to do better risk management. Okay, so these are the things that are available. This is Google Map. Now one can really identify what are the regions which are affected by floods. The blue color one indicates that the regions which are affected by floods here. On a live basis, you can really see the drones are being used now in a medical aid or in a various applications. So this is what I wanted to discuss with you. So I hope that I made my points clear in saying what are the applications of the technology in the insurance business, what is happening today in the insurance industry. Yeah, so thank you very much for giving me the opportunity to interact with your students and your faculty. And any question is there? I'm open to the questions.
Thank you, sir. Thank you for your presentation. Participants, if you have any doubts or clarifications, if you need any clarification, you can post your questions in the chat box. Yes, Ms. Shakti Priya, you can post your question.
Yeah, okay. What is the doubt?
Ms. Shakti Priya, you can post your question.
Okay, so I just read the question. Let me just get it clear. If the person's family is okay, if any persons in the family is died, how can the insurance claim for? Right, this is the question, right? So if a person dies and if the person is insured, what they have to do is they have to inform the insurance company. Okay, so you have to submit the policy copy of the policy document. You have to submit the proof of his death, the death certificate, the cause of the death, right? And based on that, what the insurance company will do, they will just check whether the death has happened naturally or whether it is accidental death. See, except suicide, any kind of death is covered. If the death due to the natural due to any of the disease, or if the person dies in an accident, then the insurance policy covers that death. Then in that case, whatever is the sum assured of the policy, in case he has taken a life insurance policy, then whatever is the sum assured of the policy, that is given to the dependent of the family. Suppose if the breadwinner of the family dies, so it's given to the spouse, whoever is name is mentioned in the policy as the nominee, the person has the right to receive the claim. Okay, what is the next question? Next question is, have they adopted the child? What can the child do? What is the question relating to that? So are you saying that whether the child is eligible to receive the claim in case if the child is an adopted child? Okay. Now, if the child is an adopted, I mean, you require the legal document, and the child name has to be, entered in the policy document as a nominee. So if the child name is, is mentioned as a nominee at the time of taking the policy, so even the adopted child can receive the compensation. So eligible to get the compensation, provided that her name or his name is added in the policy as a nominee. Okay. And there is a legal proof required, the registration of the child, whether the legal proof of the child being an adopted child.
Thank you, sir, for the valuable session.
Okay.
I now request Sai Lakshmi of First MCOM to propose the vote of thanks.
Gratitude is the mother of all virtues by Roman philosophers. So we extend our gratefulness towards our speakers of the day, Mr. Sandeep Pandey, sir, and Dr. Stewart Doss, sir, Faculty, National Insurance Academy, for sharing your knowledge with us, sir. Thank you very much, sir. And we thank our secretary, Srimati Usha Abhaya Shri Shrimal Jain, ma'am, wholeheartedly. And our deep gratitude towards our Associate Secretary, Shri Harish L. Mehta, sir, and our Principal, Dr. S. Padmati, ma'am, and our Vice Principal, Dr. S. Rukmani, ma'am. And exclusive thanks to our teaching and non-teaching staff for motivating us. And thanks to our technical team, you make our everyday better with technology.
Okay, so thank you all. Thank you, and all the best. I wish you all the best in your career. I mean, for a successful completion of your degree, and then all the best in your future the career prospects. Okay, and thank the organizers. Thank Madam Sumati, thank everyone who's connected with this seminar, and wish you all a great success of the seminar, and happy to interact with you all. Thank you very much.
Thank you, sir. Thank you for this session. I now request the participants to fill the feedback form. It is posted in the chat box. National anthem.